If you guys want to know why I do this to raise capital for my business. Because we have over $180 million under construction and in development right now, and it's 100% of that is mine. I've been doing this for 28 years, guys. I started back in 1998, buying land and building houses. I opened up a small concrete company in 1998, and at $1.2 million in concrete work the first year we were in business. Okay, and I did that because I got started in sales back when I was in 1993 when I first became self-employed while I was in college. And I was in multi-level marketing. I sucked at it for like 2.5 years. I got really good at leasing desk space to people in my offices, which is very similar to what I did in the retail space. And I actually made a living, not from multi-level marketing at first. I made a living from leasing desk space to other distributors in my offices all over the United States. I was actually training here in St. Louis, Missouri back in 1996. And the Adams Mark Hotel was right here in downtown. And you know where the convention center is, just right down the road here? Mm-hmm. It was pouring rain. And we were in the convention center. We had about 2,000 people there. And the electricity went out in the whole convention center, like lights out completely, no power in the entire convention center right here in downtown. And it was pouring. There was 2,000 people from our conference that just left the convention center all at one time. And there was not enough taxis. There's no Ubers back then. This is like 1996, guys. There's no Ubers. There wasn't enough taxi cabs to get us to our hotels. And it was taking a fat minute to get us out of there. So I finally was like, hell with this, I'm out of here. And I was dressed in a suit, leather shoes, and I took off running to the Adams Mark. It's not the Adams Mark anymore. I don't know what hotel it is now, but it was the Adams Mark Hotel back then. And I took off running. I was like probably 21, 22, 23 years old. I don't remember, 27, so probably 24, about 24 years old. And I took off running. The whole bottom of my leather shoes came off my whole fucking shoe, guys. Like the whole fucking bottom of my shoe was gone. The leather turned into friggin' sloppy. You guys ever seen like a cow tongue? It was like a sloppy piece of leather, man. And it saturated. And the water was over the curves in here. You guys ever get rings like that anymore? Yeah. Sometimes, yes. Shit, man. I ran back and I had literally my sock was on the bottom of my shoe. The whole bottom of my leather shoe was gone. I ripped it off and just threw it and ran back to the hotel and ruined like an $800 pair of shoes back then. I thought I was rich back then because we were making a little bit of money sales and multi-level marketing. But anyways, that's just my story for St. Louis, Missouri. It has absolutely not a friggin' damn thing to do with what we're talking about today. I just thought I'd share that with you guys because I'll never forget that day when I ran from the convention center back to the hotel. I lost the whole bottom of my shoe. Okay, so that's just my little piece of it. And I'll tell you, it was actually a great damn day. You know, great people. We all ended up getting together back at the hotel, and it was a damn good day. So anyways, I have a heart space for St. Louis and a lot of other places around the country just because I've traveled so much and done so much all over the country over the years. Now, here's the thing, guys. We started building houses in 1998 on accident. I was pouring a slab on a foundation for a house, 3 houses down from a gentleman who was building a custom home. And I went and I talked to this gentleman. He was like from New Zealand, had a really heavy either Australian or New Zealand accent. And this dude was wearing like skull rings, tattoos, was wearing like a Tommy Bahama shirt. Just looked cool, man. He was out there. He'd show up on this motorcycle every day. He'd check on the house. He was there for like 30 minutes, and then he'd beeline out of there. He'd just leave. And I was like, shit, man, what's this guy doing? And it just so happened that God put us there, both of us showing up for him to check on his crews and me to check on my concrete guys at the exact same time for 2 days in a row. And the second day, I got curious enough to go talk to the guy. And I asked him, I said, this your house? He said, no. He said, well, yeah, it's my house, but I'm building it. And he had said it with this heavy New Zealand accent. And I said, bro, how long is it going to take you to build this house? And he goes, I'll be done with it. It takes me about 4 to 5 months to build a house. And I said, how much are you going to make on it? And he goes, I reckon I better make a little over $80,000. And I said, 4 months, $80,000. I was like, 20, 40, 60, 80. I was like, shit, it's 20 grand a month. And that was about what I was netting on my concrete company at the time. And I was like, shit, I could double my income. And I go, how long does it take you? And I'd see the dude just come and go. And I was like, shit, if I could do this while I'm actually pouring concrete, I'll double my income. So I literally bought the lot 4 lots down from them. And I built my first house 4 lots down from that exact same house that he was actually building. And that was my first house. We made about $83,000 on that first house back in 1999 when I sold it. It took me exactly 4 months to build that house, and we made about $83,000 on the house. And then I figured out how to build these things, and then I built 2 of them. And this is at a time, guys, when I had a 460 credit score. Because in 1997, that company that I was out here with back in 96 went out of business by the FTC. We got shut down. We grew too fast. We went from 0 to $500 million in sales in less than 5 years. We were the fastest growing company in American history in 1995. If you guys Google Equinox International, Environmental Health Company, 1995, Inc. 500, you guys will see the cover of Inc. 500. We were the fastest growing company in American history at the time. We grew too fast and we couldn't fix it, and the FTC landed up shutting us down. And so when we got shut down, we were left with nothing. And I went into construction on accident, guys. And so today I'm going to talk about that business model, because the exact same thing that I was doing in 1998, I'm still doing today. Okay? The difference between what I do today and what I was doing in 1998 is I'm doing a whole heck of a lot more of it. And so today, guys, there's chairs up here too. You guys don't have to pull those chairs. We got chairs right up here, guys. There's 2 right here. There's 2 right up here. There's another one. There's some chairs up here, plenty of room. We got a couple up here as well. You guys come on up here and fill in these seats up front. And then we'll lay these out. We have more people. Those chairs in the back will fill in. But there's a couple chairs here, some here. There's a couple right here. And then there's one right in here. Good job, guys. Cool. Fit you guys in. So we'll fill those other ones up. In the next 15 minutes, all those chairs will be gone and the whole room will be completely filled. We're expecting about 100. We were only expecting 75 of you guys. There'll probably be about 120 people here. Okay. So anyways, the same business model, guys, that I was doing back in the 90s, I'm still doing today. You know that in 2008, and here's what happened, guys. If you guys know anything about my story, I know a lot of you guys don't know who I am. I've owned a lot of shit. I own restaurants. We own fine dining restaurants. I was the largest Subway franchisee in southern Colorado and central New Mexico for over a decade. I started putting Subway stores in my retail buildings after the 2008 recession because I couldn't fill my retail buildings. I almost went out of business in 2008 because I had too much retail that I had built. And I couldn't fill the damn retail. In fact, all my leases on my brand new product, we went 100% vacant on everything. So we had companies like Albertsons. You guys ever heard of Albertsons grocery store? Pulled out of their lease. Big O Tires. You guys ever heard of Big O Tires? Pulled out. We did an entire build out for Big O Tires with lifts and everything. And pulled out of their lease. Went down to zero. We had empty buildings and retail centers that were brand new construction that went completely vacant. Brand new construction in 2008. I was working my ass off just trying to make enough money between my concrete company and everything else. I was putting beauty salons. I didn't even know how to freaking cut hair, but I opened up beauty salons and put them in my freaking buildings to give my buildings life. And so if you guys look at Trends with a Z, cuts and salons, those were mine. And I sold them, and they were in Phoenix and New Mexico, but I stuck them in my buildings because I had to. I started buying Subway stores, not because I wanted to become a sandwich artist, but because I freaking had to. And I looked at every franchise to be able to fill my buildings. And so in 2008, my dad was doing my accounting. My dad was an accountant for 32 years. He was doing my books. And in 2009, the next year, he goes, you have a tax bill of, it was a ridiculous amount. I said, Dad, there's no friggin' way. I said, I didn't make money this year. I said, fire sold every friggin' house. I got rid of everything. I goes, no way I owe that much in taxes. We got to revisit. He said, no, you do. You made money on every single house you built. At that time, we were building over 50 houses a year. And so we made the house that we made the least amount on, guys, was $48,000. And the second worst house that we sold was $52,000. And so in December of 2009, moving into January of 2010, I said, holy shit, because the recession hit like November of 2008. But the hardest time, for those of you guys who lived through it, the hardest time was December of 2008, January, February, and March of 2009. Those 4 months were friggin' temperature taking. I just got like chills going down my body. Those 4 months were the friggin' hardest fucking months I had ever went through in business, guys. They were the only 4 months that I was in a deficit monthly, where I had more money going out than I had money coming in, ever, in all of my years of business. And still to this day, those are the 4 hardest fucking months I ever had in my life in business. Because I literally thought we were going to go out of business, and I even told my wife, I remember during Christmas time, I turned to my wife, and we had these French doors in our office. I turned to her in the den. She was sitting on the couch. And my wife is awesome because she's real conservative. We never spent a ton of money. We've made a shitload of money, but my wife shops at like Ross and she shops at like TJ Maxx. She doesn't go and spend a ton of money on stuff because that's just where we kind of came from. But I'll tell you guys, we lived a damn good life for a lot of fucking years. But I told my wife, I said, hey, look, I don't care if you spend $100 on one blouse at Neiman Marcus and you buy 100 shirts for $1 at freaking Ross. Don't fucking spend the money. I go, I have this shit down to $1, like how we need to do it, and we got to figure out which building we're willing to give up first. And that's when I started opening up all these Subway stores and investing. But the one thing, guys, the one thing that kept me going was houses. And when I got that tax bill when my dad started doing my taxes over Christmas in 2009, and I realized I was gonna have a tax bill, I said, holy shit, man, I need to build houses. I need to go back at this again and go at it hard. Because in 2009, I didn't build any houses. I pulled the plug on almost everything. I think I finished 2 houses, and we didn't build any in 2009. January of 2010, I said, we're gonna build some houses. I went back to every single contractor that worked for me. And I said, hey guys, I'm gonna get us all through this recession. And not only am I gonna get us through this recession, we're all gonna make some money. We're just not gonna make as much as we were making prior. And so I redid the business model. And at the time, I had a buddy, his name was Bob Cantor. And Bob, he'd come in and Bob told me, Jerome, let's sell some little retail buildings. I go, Bob, I got fucking empty buildings here and you wanna sell retail buildings. And so we started buying these like old value-add retail buildings. And Bob goes, let's build these things with such high quality, Jerome, that he goes, you build them, you remodel them, you renovate them, I'll sell them, and all the money that comes in, we'll split it 50-50. And I told Bob, okay, you better be able to sell these fucking things. And that's what I told Bob. And so Bob came in, and I remember going in, I brought this flooring to Bob. And Bob came in, I brought this flooring, he goes, Jerome, go pick out some hardwood floors for this little building. It was like a little 2,200 square foot building, one of the smallest buildings I'd ever worked on, okay? And I went and showed the hardwood floor to Bob and dropped it off in this little basket where he kept all his keys to his properties, because Bob did what I did. I dropped it there. There's some chairs up here, guys. There's a few right up here. Come and join us right up here. And there's a few right up here. It's like church. I'm your usher. I'll pass the basket around. You put your money in it, lady. All right. Those floors, those hardwood floors, guys, they were like $2.99 a square foot. Nice hardwood floors. Decent, even in today's era, right? $3 hardwood floors. Decent hardwood floors for a commercial building. Bob came back the next day, dropped in my basket in my office with Cammy, my assistant, who still works for me, a piece of flooring that was $6 a square foot. First thing out of my mouth when I saw that flooring, I go, what's that? I asked Cammy. He goes, Bob brought that back, so that's the flooring we're going to use on the zebra building. It was this building that was painted like a zebra. And I go, I looked at it, and I turned it over, and it said $6.59 a square foot. I go, is fucking Bob on crack? I was like, we ain't putting that shit in that building. So I called Bob. I go, Bob, we ain't using this flooring. It's too fucking expensive, bro. And he goes, Jerome, just put it in there. And he went back and he went and visited the building that day. And he goes, Jerome, are we insulating the walls? I said, yeah, the walls are already insulated. It's an old building. He goes, no, I want to re-insulate the walls. Like when we do the drywall, we do the stucco on the outside, I want to insulate those walls. And then a week later, we started doing the roof. And I was just going to re-roof the building. So I was thinking, okay, shit, brand new roof. Great building, right? It has a brand new roof on it. You're going to sell this building. It has a brand new roof. That's a damn good product. Bob called me up and said, hey, did you insulate the roof? And I said, no, Bob, we're re-roofing the whole damn building. He goes, insulate the roof too. And so we landed up going in with 2-inch foam on the whole roof, re-roof the entire property. And we did it with insulation. And Bob's whole thing with everything that we were doing is he said, Jerome, if you give me the highest quality product, he was going to investors and saying, hey, this product is turnkey. You're an investor. And he had a portfolio of investors. He goes, you won't have to touch this building for the next 15 to 20 years. Just lease it. And that's all you have to do. So Bob would leased it up to a barber shop and a beauty salon. And he sold that building. And we walked away with about $120,000 in profit, each with $60,000. At a time when I couldn't even fill retail, at a time when it was a housing crisis, I'm building houses, guys. In a housing crisis, when Lehman Brothers collapsed, I'm building houses. And I learned something from Bob, because we were at the tail end of that building when I got back into building houses, and I learned something. Quality sells, guys. Sophisticated buyers will spend money, even in a shitty market, if you do shit right. Does that make sense? So everything that I talk about today, when I'm underwriting this, you're gonna understand how all of this comes into alignment with our business model and what we do on a professional basis every single day. Because my mind shifted a little bit that whole year as we went through all this stuff. Because I'm a broker, I'm a real estate broker. I don't do it to make money. I got my broker's license in 2000 to save money. But to my advantage, you know those little Supra keys where you go in and you get into the lock boxes, you realtors? Yeah? You know what I'm talking about? The little Supra keys, now it's your phone. Yeah? You guys know which ones I'm talking about? Yeah?
Yeah.
Okay. So I would go to the doors and I would go into my competitors' houses and I would look at the shit they were putting in their homes. And every single custom home, guys, that I walked into had either a piece of shit Glacier Bay toilet that was $99, and they started lowering the quality of their product. And they had these bullshit light fixtures that I was using back in the 90s. A decade later, these little $29 chandeliers, putting them in $700,000 homes. Nobody was buying that shit. Their houses were sitting in the market. You know what we were doing? We were putting big-ass chandeliers. We would go in and we would put an extra $10,000 into every house and sell them for top dollar at a time when nobody else was selling homes. You guys ever had a favorite restaurant and you would go to that restaurant for a specific food item? You guys ever done that?
Yes.
And then they take it away?
Yes.
And you're pissed, right? Like, damn, why'd they change it? Like, we don't go to Applebee's. There's a perfect example. My wife is vegetarian; she doesn't eat meat. But Applebee's in the 2008 recession, they would get built in Applebee's right down the road from our house, and we would go there. It was our go-to for a quick bite. We would go there because they had fresh vegetables, and my wife loved going there because of the fresh vegetables because she's vegetarian. And then in the 2008 recession, they took away the fresh vegetables and started using frozen shit. It was the last time I've ever eaten at Applebee's. Was 2008. Okay, so you lose your buyers. Okay, so understand, guys, that everything we do when we talk about building houses and what we're talking about in real estate comes about because of the quality and sophistication of everything we do. If you don't have that type of level of sophistication and quality that you want to keep in your mind, you're in the wrong place. Make sense?
Yeah.
Okay, now, here's the thing. I'm going to start today where I'm going to finish. And then, because I want you guys to understand what the goal is that you have in mind. Then I'm going to talk about building houses. So I'm going to take you guys into the multifamily space first, and I'm going to talk about commercial real estate for about 10 minutes here before I get into single family homes. Is that okay?
Yeah.
Okay, now, here's the game. How many of you guys would love to be in multifamily? Raise your hands. Okay, perfect. The whole room. And here's why. Because multi-unit real estate, guys, that is where there is cash flow, and that is where residual income comes from. When I was in multi-level marketing, to my advantage, my mentor always told me that you have nothing and you have no wealth unless you have residual income. And so when I got into construction, I got in just buying rental homes back in 1998, not even building the houses, just buying them. Because I just wanted an asset that is tangible. And I wanted something that will rent. And I didn't know how to underwrite real estate. In fact, I was building retail buildings that were worth over $8 million back in 2008. And I didn't even know how to underwrite real estate. How many of you guys know what a cap rate is? Raise your hand if you know what a cap rate is. Okay? Now, if you guys know what a cap rate is, do you guys know how to figure out a cap rate? Raise your hand if you know how to figure out a cap rate. Okay, so maybe 3 of you guys. Now, let's talk about this real quick. Because this is the basis to all real estate, guys. How many of you guys are afraid to invest in real estate because you don't know what the shit you're doing? Raise your hand and be honest. The rest of you guys don't know exactly what you're doing?
No.
How many of you guys are afraid to lose money in real estate? Let me rephrase it. Raise your hand if you're afraid to lose money in real estate. Raise your hand. The rest of you guys aren't afraid to lose money in real estate. Fuck, I'm afraid to lose money in real estate. I'm afraid to lose money in real estate every day. Rick was asking me a while ago. I was on the phone on a $70 million development that we've been trying to get out of the ground for 3 fucking years, guys. 3 years. And we're finally getting it out of the ground. 3 years, guys. $70 million development. Shit, I'm afraid to lose money. I told Rick, I go, so what's up with that one? Because they've been following the progress on my Camelback project. And I go, bro, we're going to get it out of the ground, and we have to get out of the ground before October because our permits expired. And so we got it coming out of the ground. And we're going to do it safely. But you got to understand something, guys. It's all a waste of time if you don't understand what I'm going to talk about right here, because you'll lose your ass. But the biggest thing is most people don't know how to underwrite real estate. And so the number one thing that you guys should know is this right here. Value equals net operating income, NOI, divided by cap rate. Okay? Now, How many of you guys are in multifamily right now? Doing syndications or investors in multifamily? Okay, so a couple of you guys. Cool. Now, if you guys have interest in our products, the reason that I do all of this stuff is because we raise capital from these groups. There's people that come in, they have a few dollars, they want to put it into some of our projects. Our projects are awesome. We don't have funds. We only raise one project at a time. Okay? Now, and what happens is a lot of people that work with us in our community, they also invest in our projects over time. Some of them not immediately. Sometimes it takes a year, 2 years, 3 years, and they invest with us over the course of time. Now, this is important. Here's why. There is $2.8 trillion worth of commercial real estate coming up to the open market that is in financial distress over the next 18 months. We're already seeing it right now. In fact, I was fighting over a property in Mesa, Arizona last week that we lost. Pissed me off that we lost because it was one of these properties, guys. Someone went in and bought a property on a 5-1 ARM, 5-year fixed rate mortgage. On the 5th year, it becomes an adjustable rate mortgage. Where were interest rates in 2020, guys? Where were interest rates at 2020? 3%. About 3%, 2020? Okay. So 2020, 3%. Okay, where are they at today?
7%.
About 7%? Banks are underwriting them at a 6.5% debt ratio right now. Okay, so let's do 6.5% because that's where banks are underwriting, is at about a 6.5% debt ratio. Okay, now listen to this, guys. If you guys don't take anything more away, but this right here today, this right here is life transformational for everybody that's in real estate. You need to know that. You know how people get little tattoos of like, they say love or like they put like some bullshit that they don't even know, like some Chinese bullshit they put on their arm, right? They don't even know what it means. Guys, tattoo this shit on the back of your neck, right here. Value equals NOI divided by cap rate. That means something, guys. This means something. This will hold you together financially, okay? You want to put a tattoo? Put that on your arm. Put that down your neck, okay? And here's why. Look, guys, cap rates and interest rates run in alignment with each other. You can't pay a mortgage unless the asset brings in enough revenue to pay for that percentage of interest that is on that piece of real estate. Does that make sense? So if you have a mortgage and the interest rate is at 3%, that asset has to make at least 3% a year in order to be able to pay that mortgage. Does that make sense? Mm-hmm. Okay, so a cap rate is the rate of return if you pay cash for that asset. So if the asset was worth $2 million and you've invested $2 million to buy that asset, the cap rate is the rate of return. So that's if it's sold for a 3% cap rate, that means it makes 3% annualized on that $2 million. Make sense? Okay. Now, properties were selling for sub 3% cap rates in 2020 and 21. Were they not? Yes or no?
Yes.
How many of you guys are in commercial lending, commercial real estate, and know that that the interest rates were selling about there? You multifamily apartment syndicators. Yeah? Or is this like way over your guys' head?
No.
Over your head? Okay, that's all right. Because I'm starting off at the end. So understand this stuff, because this will be a pivotal, you'll have an epiphany right now. It'll be a pivotal piece of what you're going to need long term. People are going, wow, what Jerome? You're getting so in depth with this stuff. I just came here to learn how to build houses. I know. But look, guys, you'll never come to a meetup ever again where somebody gives you as much value as what I'm going to give you guys today, because this shit will protect you financially forever. Does that make sense? Yeah. Okay. I got some chairs up here too, guys. We got a chair right here. I got another one right here. There's some chairs up front here as well. Okay. Now, listen, guys. If you take an asset that, let's say, is producing $200,000 a year in revenue, okay? And that's what it brings in annualized. Let's say you have a little 15, 20 unit apartment complex and it brings in $200,000 a year in rent, like average rent, $1,700 a month. If you go out and you expense your property taxes, your insurance, your light bulbs, your toilets, the maintenance, the lawn, the leaf blowing, all of that stuff, let's say that at the end of that, you have $120,000 left. And let's say it costs you $80,000 to be able to run and facilitate that entire property. Does that make sense? Okay. So if we brought in $200,000 in gross revenue, what's netted, our net operating income, is $120,000. So we take $120K and we divide that by our cap rate. Okay. Our cap rate in 2020, 3%. Our interest rate, 2020, 3%. So we go in, we divide this by 3%. This is banking rules, guys. Do you guys pull out your phones real quick. Everybody has a calculator on their phone. I want you guys to plug this in and look at the numbers, guys. Because when you do it, you learn it. Take $120,000 and divide it by 0.03, by 3%. What is that number?
$4 million.
$4 million?
Yeah.
Yeah, the cap rate is just based on what the open market is selling for. Cap rate is based on interest rates. They run in parallel to each other. Okay? Now, so it's all going to be based on the revenue that asset's producing. So $4 million is where, right now, $4 million is what the value of that asset is in 2020. Okay? Based on the cap rate. You guys ever go to Las Vegas, Nevada? Any of you guys ever been to Las Vegas, Nevada? You guys seen those big, beautiful billion-dollar, multi-billion-dollar hotels and casinos? You guys ever seen those?
Yes.
Okay, they building those for free?
No.
Are they building those because they're losing money?
No.
Okay, no, they're building those because the house works on a set of rules. And when they function on those set of rules, it gives them a 4% return. That 4% return, guys, makes them billions upon billions and billions of dollars. The odds are in their favor because they know the house rules. Do you think if you knew those house rules and you guys function with the same set of rules, you guys would probably win more when you go to Las Vegas, Nevada? Probably so, but the average person doesn't know those house set of rules, do they? Okay, now, banking, guys, they're just like the casinos. How do banks make money, guys? By lending money, right? They lend it at a premium. They take cheaper money, lend it at a premium, and that spread is how they make money. They work on a house set of rules as well. We're going to talk about that house set of rules today. This is one of them. Okay? Now, how many of you guys, when you guys get a loan, are scared to give the bank the information? You're afraid to give them the wrong shit, and you're not going to get a loan. How many of you guys are afraid to give banks the information? I mean, I always was. I was always afraid. I was like, going, damn, what if you had the same set of rules that the banks had, and you underwrote your properties like the banks underwrite your properties, and you function with the same risk tolerance as the banks? How many of you guys think you'd be more successful? Yeah, right? You'd be more successful if you function on the same set of house rules. So the biggest thing, guys, is this is how the banks function right here. When cap rates are trading, they won't lend on assets that don't have the financial bearing. Interest rates are not too high right now, guys. Interest rates are just as good as they were in 2007 when we had the strongest economy. Our interest rates aren't high. 7% interest rates are not high, guys. You know, the only problem in today's world isn't the cost of money. It's that interest rates went too low. Does that make sense? And because interest rates went too low, what happens, guys, is that the way money was lent out was frivolous. And so the banks landed up compromised, and so did the owners. Because today, you take the same property, $120,000, same rent, guys, same tenants, same occupancy, same walls, same roof, same carpet. Nothing's the same. The same amount of money is coming in on every single asset. In fact, rents have probably went up in the last 2-3 years, has it not?
Yes.
But even with more income, guys, there's one stress factor, and it's the cap rate associated with interest rates. Banks are underwriting real estate at a 6.5% debt ratio right now. That means that they won't lend money on anything over a 6. They'll lend money like on a 5.5, 5.3, 5.75% cap rate, but you have to come up with the equity. They're not going to take the risk factor. They're going to underwrite it at a 6.5% debt ratio. So if we put this in at 6.5% and we look at the value, take that same, pull your phones out again. Put $120,000 divided by 6.5%. 1.86, let's put 1.9 million. What the hell happened, guys? 2020, 2025 value. It's worth less than half of what it was just a few years ago. How in the world does a bank lend money on a $4 million asset when it's only worth $1.9 million based on its debt ratio? How many of you guys just sat back and said, holy shit? That's where $2.8 trillion worth of real estate is coming to the open market, guys. Because $2.8 trillion worth of real estate was oversold and traded for too low of a cap rate. And a lot of investors, syndicators, they trade this stuff on what's called a 5-1 arm, a 5-year fixed term loan, because they wanted it the cheapest money they can get for the largest spread when they sell, hoping that they increase rents and they increase the revenue, making them money when they sell the asset. But the problem is they got caught. And so now all these multifamily syndicators, people in office, retail, they're fucked. Period, guys. They're fucked. You understand? And so you can't retrade those assets. So what I'm teaching you guys here today, the reason that we function on new construction is because I can control my variables. Does that make sense? I can control it and I can underwrite it so I know how much it's going to cost me to build and what the asset's going to be worth upon completion. You understand? Okay, that is the single most important thing that you guys ever will need to learn and understand and know in real estate. Make sense? If you understand that, you'll never lose money in real estate. But you have to understand it inside and out. And if you check your numbers, just like algebra, you will never lose money in real estate. If you suck in algebra, get a tutor. Okay? This is just simple arithmetic, ladies and gentlemen. And the reason that you guys are here today is, and we're going to talk about building houses right now, but the reason you guys are here today is because I'm going to invite you guys to come spend an entire on September 27th and 28th. It's my Build Wealth workshop. It's the only weekend that I'm available to do this shit. Because my son is in football, it's the only week that he has a bye week. I will not miss a football game, guys. And I won't miss any of that stuff. And so it's the only week he has a bye week that week. So I scheduled this workshop around my kids and his only bye week that he has available. Okay? And so if you guys follow my stuff, you guys understand that my kids are as successful as I am because we expect nothing less out of them. Does that make sense? My son's a 2-time nationally ranked gymnast. My daughter's a 1-time nationally ranked gymnast. My son is first team all-state, first team all-district, first team all-metro, offensive player of the year, the wide receiver of the state. He holds all the accolades. And he has D1 offers all over the place to play football, all over the country. And that's the only weekend that I have availability to be a part of doing a workshop for you guys. That workshop will be life-changing. And it'll be the only workshop that I do in 2025. Make sense? If you have the ability to be there, get your ass there. Okay? Now, we'll talk a little bit more about that workshop as we run through this because you're going to understand even more why it's so important for that workshop. Because I can only give you a little bit in an hour, hour and a half today, but I'll be able to give you guys a ton over 2 days at a workshop that teaches you guys this stuff in depth. Does that make sense? Yeah. How many of you guys want to learn how to get a bank to pay for the land for you? We get almost no money out of your own pocket. How many of you guys would love to learn how to do that? Okay, let's talk about it. Okay, let's start talking about it now. We'll talk about that. You guys need me to put this back up, or are you guys okay? Here, let me put my stuff up here. I always put this in before, but I was on the phone dealing with bullshit before I came in here. Okay, this is on IG, guys. Follow my stuff on Instagram and follow my stuff on YouTube, guys. Okay. I started doing this stuff. You guys know an influencer by the name of Ty Lopez?
Yeah.
Okay. He's a really close friend of mine. We're business partners. We own a bunch of real estate together. I came in to help him, and then he helped me with this stuff. I didn't even know what the hell I was doing, guys, with this online stuff. But follow my stuff, guys, because our stuff is really good. And I do it for free. There's so much information on YouTube and Instagram that, you guys can get rich just off the information that I have on those two social media platforms. Okay, now let's talk about this business model that works, that'll protect you guys. I need you guys to understand this, okay? One of the biggest things you guys will learn about me is I ain't gonna bullshit you guys. I am gonna use profanity because that's just who I am. I grew up wrestling. I'm gonna treat you guys like my wrestling coaches treated me, okay? I don't know anything else. I wrestled D1 all the way through college, and my coach called me a puss every single day of my life, okay? So I'm just gonna, is it okay if I talk and treat you guys like I'm coaching you guys on something, like a real coach? Not like these pussy coaches that give medals and trophies to all these bullshit kids that don't deserve them? Is that okay?
Yeah.
Is that okay? Okay, I'm just gonna be real with you guys. I don't deal with the bullshit, okay? So all this weak ass bullshit that goes on earth right now, I don't condone it, I don't support it, and I won't, and I'm gonna sit back and fucking tell you that. Make sense? And my profanity, you have a problem with it, you can leave right now because you'll never make it doing what we're doing anyways. I do it on purpose to probe you and push your buttons. Okay? So if you don't like it, I'm sorry. I'm not going to change for you. I'm fucking rich tomorrow, whether you like it or not. I don't fucking care. Make sense?
Yeah.
Okay. So we're gonna roll like that today, and I hope you guys can appreciate it, because I'm not gonna fuel you guys with any bullshit today. I'm gonna give you guys real shit. Make sense?
Yeah.
Okay. Let's talk about this business model, guys, and it works. It's the same damn business model I still use. In spite of me going out and building a couple $100 million worth of development every single year, I still build a few homes every single day. Because I can develop doing what I do right from my living room, and it drives my wife crazy. She tries to kick me out of the house every damn day. She's like, it's 11 o'clock. You don't leave the house yet? So I have to have something. So I still build a few houses, because I can run my whole business out of my living room, doing hundreds of millions of dollars in development right from my living room, and it drives my wife nuts. So I still build 2 or 3 homes every single year. And it's cool, because I make about 300 grand per house. You guys will learn how I do that today. And I have students all over the country that are doing it, and you know what's cool is they're freaking making that much. In fact, Rich Maine sent me this message today. He built a house right by the freeway in Tucson, Arizona. And I told him, Rich, I was like, dude, you've been a part of our like high-level group forever. What the fuck are you doing, bro? And he goes, dude, I just didn't think that was that important. I said, yeah, you don't build like freeway in your backyard. Rich sent me a message, and this is what he said, like, bro, read that message. Read that message that Rich sent me today.
Jerome, FYI, finally got an offer for the house here in Tucson, sold it for $640K, closing on July 30th, still making around $200K. I want to let you know, free direction, documentation, what do you think about it?
How cool is that, guys?
Yeah.
That's pretty fucking cool, right? That was today, guys. That was right there. What does that say? Right on top of that. What does that say?
June 15th. Oh,
Today.
today.
It says today, right? It says today. It says right there. It says today, right? Yeah. Guys, so it's cool. It's not just me. It's students. We have over 2,000 of them nationwide building shit. It's cool. Okay. Now, look at guys. 74% of the population is our median and upper median, our median and lower median buyers. Okay. These are our DR Hortons. These are our DR Horton, our LGI homes. These are our KB homes. These are all our Toll Brothers and all of our big builders, guys. They function on these guys. These are homes that are less than $600,000, okay? The average median home is $420,000 nationwide. This is our median home, okay? We don't function in this area. We don't hit that 74% at all. You know why? Because 85% of that 74%, if there's a $500 volatility in their economics, meaning that they lose $500 a month for more than 60 days, in 60 days, 85% of them are delinquent on their mortgage, their car payment, and their credit cards. That's a real statistic, guys. The vast majority of the United States lives month to month, paycheck to paycheck, and they have more month left at the end of their paycheck. Does that make sense? Mm-hmm. And so we don't function with these guys because that can't protect us financially in a housing crisis. When there's a housing crisis, guys, we don't want to be stuck with these guys. So when you read the open media and they say big builders are compressing and not selling homes, the reason why is because they're selling to these guys that are buying average median homes. So we don't function on the 74%. 2% is our ultra wealthy. We don't function here either. This is where a bunch of my friends went bankrupt. I never functioned on the multi-million-dollar homes, guys. Back in 2008, every friend that I knew that functioned on multi-million-dollar homes, they all went bankrupt. I have a buddy who had Allstate agencies, very successful insurance companies. He lost his insurance companies. He lost his home that he had forever, and he lost everything. The 2 houses that he had for sale because he couldn't pay the mortgages on them after several months, and he ended up having to go bankrupt. Don't get in this area. When you make money in this area, it's cool. You can make a shit ton of money here. But the problem is these guys are super smart, and there's not enough bandwidth in this market because of 2%, the 2% of the ultra wealthy guys, those guys control 97% of the money on this earth. Does that make sense? They're controlling the economy. We don't function on that. What we function on is the 24% of the upper middle class, okay? Now, these guys are the clerks at our grocery stores. These guys right here are our teachers. These are the nurses. These are the people that are working at our grocery stores. These are the people working at the Starbucks. These are the people that are the accountants. These are the people that are working as our service employees at our fire stations, our police stations, and all of our service workers. That's these people right here, okay? These people right here are our doctors, they're the engineers, they're the attorneys, they're the self-employed entrepreneurs that own successful plumbing companies, own successful restaurants that do well. Now the question is, do these people right here live in the same subdivisions as these people right here typically? Yes or no?
No.
Not typically, right? So think about it from this perspective. I'm asking you this as a question for the reason of demographics on where you need to look right here in the St. Louis area, okay? Think about this for 1 second here. This is your business model, guys. Where are these people moving? You're coming in from California. You're coming in from New York. You're coming in from Florida. You're moving into St. Louis, Missouri. You call your local realtor. You call your local, what the hell is that thing called where you go when you're moving? Like the people that are hospitality people? Yeah, the Chamber of Commerce. You call your Chamber of Commerce. You say, hey, I'm moving into this area. I want an area that has the best schools for my kids. I'm moving into this area because I want the best school for my kids. I want the best jobs. I want the best quality of life. I don't want to be around riffraff. I want to be around the more affluent. I have ATVs. I have boats. I have shit that I want. Where do I move to?
Kirkwood.
Kirkwood? What is that other one? What was the fastest one? Forestell?
Medium household, 700,000.
700,000.
Forestell, F-O-R?
Which is actually where I live.
Yeah, F-O-R?
F-O-R-I-C-E-L-L.
Okay, I don't know, I'm spelled like that.
Chesterfield.
Chesterville?
Chesterfield, that's one.
Frontenac? If they're spelled wrong, it doesn't matter. I'm dyslexic anyways. It doesn't matter. Okay, what else? Wildwood? Okay. Now, that's good enough, guys. Now, when we go into these areas, guys, and don't get caught up in this. When I ask this question, everywhere I go, people get caught up on like trying to be right on like this one piece of land, this one specific area. Look, guys, it's very generalized. Where there's a lot for 75,000, there's probably a lot for 200,000. Okay, but it's probably in a slightly different area. Now, on average, guys, just on average, because I go in and I'll do these, and be like, no, that's not how much lots sell for them. Calm the fuck down. Okay, again, it's like the median. On average, guys, if you in these areas that there's $700,000 homes, $800,000 homes, $900,000 homes, where there's like multitudes of these selling, like 5, 6, 7, 8, 9 of these every 6 months. They don't have to be like every day. But how much of is the land for these lots typically?
150.
About 150? Does that sound about right?
60,000 an acre and up.
60,000 an acre and up?
Yeah.
Okay. With utilities?
No, easement, around 200.
About 200 grand?
Around 200, in Frontenac is about 200.
Nicer lots. So those homes have to be selling for what, $1 million then?
Yeah, 1.2 and above.
Yeah, $200,000 lots, 1.2 million bucks. That's what I'm paying to Kirkland, Washington. When I build in 11 different cities across the United States, and in Kirkland, Washington, we're paying about $200,000 to $250 a lot, and we're selling homes for $1.2, $1.4 million. And so that's about average for that. Now, understand, guys, before you guys get caught up on this, a lot of times what I'll do is I tell people, go in and look at the comps and just see what the house they're selling for. A good rule of thumb is never to pay more than 20% for the lot. It's when you're building on the finished price of the house. So if you take a $900,000 house and you divide it by 20%, that's going to be your lot price. Does that make sense? Now, that includes utilities, guys. When I say that includes utilities, that doesn't mean that they're like in the house for you already. That just means that there's water, there's electric, and they're on the lot. Make sense? Okay? You don't have to dig down the road. You don't have to cross the street. Water's there, electric's there. I don't give a shit about gas anymore. I used to. Gas doesn't matter anymore because gas now, you don't put gas. Like in California, you need 5 energy credits. You have to put solar on the house to get that 5th energy credit. That's the way the whole nation is going right now, guys. So as the whole nation goes in that direction, gas is going to become a thing of the past in houses. And that's the way the codes are actually starting to read in some of the largest states across the United States right now. Make sense? But water and electric are super important. So if we look at these areas, now, Forestdale, you guys said about $700,000, $900,000 homes? Okay, how much are the lots in those areas?
Depends on what side of lot you want.
Doesn't matter the size of the lot. All I care about is the comp. All I care about is the pad site. All that matters to me is the comp. I don't care if it's a postage stamp lot that's 10,000 square feet. I don't care if it's a quarter acre, half acre, a tenth of an acre,
Most
3
subdivisions
acres.
going up there, you're gonna be on a minimum 3 acre lot.
About 150? Okay, so let's take 150. Okay, so we take 150K for the land. Now, on that 150K, the average home is probably selling for what, 700,000 to 900,000, give or take? So can we fairly say that it's like average, maybe like 800 grand, 750, 800?
Median 700.
Median is 700? 150 for a 700K home, I got a problem with that. I need to be a little bit more expensive. How big are those homes for 700K?
Like 3,000 square feet.
2,000 square foot.
About 3,500? Okay, so let me teach you guys some stuff right now. We're not going to go there. I know this exists because it exists everywhere. I have these students that are building out here. You want to be building over $285 a square foot per concept, okay? If you can't find a house for $285,000, the business model, migrate. 100% of everywhere across the United States, some of the hardest cities, like Corpus Christi, one of the hardest damn cities to friggin' do this. And I got a young lady named Annabelle that just friggin' finished her first build and crushed her first profits. Young lady, her husband works in the oil field. She did it all on her own. She just finished crushing profit, and I just moved her into a more affluent area in Corpus Christi. But there's very little affluency in Corpus Christi, guys. So if Corpus Christi has it, you guys are growing. You guys are progressive. In fact, you guys know that you guys are the #1 growing demographical area based on logistics in the entire nation. You guys understand that? You know what that means, guys? The largest, Amazon is not a retailer. You guys understand that Amazon is a logistics company? You guys understand that? Home Depot and Walmart now are not retailers anymore. They're logistics companies. These guys know how to move product all over, not just the United States, but all over the world. You understand that?
Yeah.
You guys right here in St. Louis, because of how you guys are situated in the United States, are the #1 fastest growing logistics area in the entire nation right now. You guys understand that?
Yes.
You understand that you guys are bringing in so many people from out of state, and you guys are growing right now at a more rapid rate because of it? Warehouses are big. All of this shit's big. These people need places to live. You guys should be getting tingles inside knowing that you guys are the world is moving to logistics, guys. Plain and simple. When we leave this earth and when we leave our kids here and we're gone off this earth, logistics are still going to be the #1 most important thing that we're working towards. And you guys are sitting in the hub of the largest logistics growth in the entire United States. You realize that, right?
Yes.
I hope so. Because if you don't, you need to. So understand, guys, when you guys go in, okay, so when you guys come in, and you guys are looking at this, I want you guys to understand that there is no lack of affluency right here in St. Louis, Missouri, okay? Now, the largest profits come from houses that are selling for $300 a square foot and more, okay? $300 a square foot, and we're talking new construction, okay? Now, $285, I'll let you guys build. I'll even let you guys build at $275 a square foot on resale prices, but I'm not as excited for you guys. I know you'll make some money at $275 a square foot on the resale prices, but I want to see you guys really crush profits. The $285 to $300 a square foot or greater is what I want you guys to see. If you guys don't hit those, don't build it. So once you get into the 3,500 square foot homes, what happens is your price per square foot starts to go down. So what I tell people is when we're functioning on the 24% of the upper middle class, function on homes that sell for between, I would say 650 is the bottom end, guys, 650K, all the way up to $1.2 million, okay? To 1.2 million. Homes right around 1,700 square feet, and don't go over 3,500. If you guys can stay at 3,000 or less, I prefer 3,000 square feet or less, okay? Because your price per square foot is better. Now, if you're in Texas, all their houses are big, so I let Texas go to 3,500 square feet. Here, stay under 3,000 square feet, guys. You don't even need to go over. All the houses I've built 2 houses my entire career over 3,000 square feet. Well, 4. I built 4 actually. because the house I live in is like 10,000 square feet, but I mean, shit, I didn't build it to sell it, right? Like, I live there. So my whole thing, guys, is don't build anything to sell. It's bigger than that. Here in St. Louis, Missouri, you don't need to. Because when you do that, guys, we're looking at days on market, DOM, days on market, and we're looking at highest price per square foot, okay? We're looking at these two things right here. Those two things will make you money and keep you from going broke. Those two things. In fact, when we go in, guys, and I'm looking at these houses, if I get to a place where the houses are sitting on the market for like 120 days, and I have to take a little bit of a squeeze on my resale price to get it down to where I can get down to like maybe a 60 days on the market, I'd rather go in and take a small profit loss and sell that house and keep moving than sit on that house for an extra 60 days. Because safe money is moving money. Does that make sense? Yeah. And you have to think about it in dividends. Because when you're dividing capital, guys, when you're dividing capital and you have moving money, and if you do it over the course of months, every 2 months that you cost yourself with a house on the market, and you divide that and multiply it by multiple houses, you land up cutting yourself short of hundreds of thousands of dollars in profitability. Because if you're going to go out and make $120,000, $150,000, $180,000 on a house, but you're trying to save $10,000 on the sales price, screw the $10,000. Sell the damn house, move to the next house, because you're going to make more moving the house, and you're going to cost yourself less brain damage. Does that make sense? Okay. Now, how many guys fix and flip in here? How many guys fix and flip? Okay. Shittiest business in the world. Sorry, guys. It is scarce. It's a hard-ass business, man. I get it, because we would do it. We would do fix and flips just to keep our crews busy while we were building houses. In between, we used to have to take a house out of the ground every single week. In the 2008 recession, guys, I either broke even or lost on 100% of my fix and flips. We had like 8 of them. And the thing is, man, you're trying to get these things buttoned up before an inspector shows up and catches you doing the electrical work or your plumbing work. Then they show up and you're like, shit, you got to upgrade the whole damn thing. There goes your $30,000, $40,000 in profit. And you're sitting back, and it's like that on every damn fix and flip. Guys, the ground up game is where it's at, okay? And I'll tell you, because it's a lot more profitable. Now, when we go in, guys, the average house to build it nationwide, it costs about $140 per square foot nationwide, according to the National Association of Home Builders. Now, we're not building an average median home, guys. We're building upper median homes. You guys can Google some of my homes. You guys got your phones out? I'll give you a few addresses. One that just sold is 301 NM for New Mexico Highway. So NM 265. That's the highway, Highway 265. So 301 NM 165. 165? Yeah, NM 165, Pasitas. Take a look at like the trim outs on that house, okay? I have a bunch. I can give you guys a bunch more addresses so you guys can look at. That house right there that you guys are looking at cost me $151 a square foot to build. So most of you guys are not contractors. How many of you guys want to learn how to get money for these things and also pay for the land? How many of you guys want to do that? Okay. So when we do that, guys, you're going to have to hire a contractor if you don't have experience. If you have experience, more power to you, you're going to make more money. But if not, it's going to cost you about $165 a square foot to build that house, something similar to that house right there. Okay? Now, when we go in, you take an average home. Let's say that this house that we're selling, we have the land for $150. Okay? Now, if we go into one of these areas and we build a 2,600 square foot home, how much is that house is it gonna sell for in Chesterville or Kirkwood? 2,600 square feet.
700,000 dollars.
About 700 grand. We're going in. How much is it selling for over in Forest Hill?
Do they have houses that small?
Are they that small? You guys aren't building houses that you guys?
I mean, my house is 4,600 square feet.
Is that total square feet or heated under air?
That includes the basement.
So that includes the basement.
Yeah, it's like
Okay.
3,000.
Basements are different though, because basements, guys, and I'm not going to go through basements with you guys. And I know you guys do a lot of basements here. Basements you build for free, guys. There's no money in basements. Basements are only worth 50% of the value based on banking rules. So when you go in and you build a basement, I'm talking about heated square footage minus the basement. And when you're talking overall square footage, it's going to bring your price per square foot down. I'm not going to get into all that today because I'll confuse the shit out of you guys once I get into basements. Because basements is a whole different ball game. But I'll underwrite that when we're going through our educational classes each week, because basements are very important to understand if you're in an area like St. Louis where there's a lot of basements on your house.
Everything
Yeah,
all
you
have
have
a
a basement.
Everything
You gotta
you
have
have
a basement.
is
Yeah,
basement.
yeah, but here's the thing with like basements, like DR Horton and stuff. Let me kind of go through this real quick since everything out here, and I know you guys have a lot of basements out here. Look, when DR Horton, like in prime markets, when the market is super thriving, DR Horton puts the basements in, but they'll put sheetrock on the wall, they don't trim them out, and they sell them unfinished. In compromised markets, DR Horton, you guys, they trim them out, they put the carpet, they put the lighting, and they finish them out because it sells the house. Does that make sense? But guess how much money they make on the house, on the basement? I mean,
What comes to play, major play here is the walkout basement. At least have egress window, because there's no
Yep.
egress window, no walkout egress.
No walkout.
So when you do that, though, the basements are costing on average of about $110 a square foot to build out the basement. Does that make sense? Okay, so the cost to build out your basement is super simple. People are going in, because banks don't lend on those basements the same way they do on the primary floors. So a lot of the houses, if they're, let's say they're two-story or walkout basements, or they're considered a two-story house or even a three-story house, where the main room, the main living room here is, because I did this in Virginia. When you go walk out, when you walk into your house, you have a kitchen, you have a bathroom, you have your living room, and you have your deck that comes out over the house. You go upstairs, and that's all your bedrooms upstairs. You go downstairs, and that's another living area, another bathroom, typically your laundry room in your basement. Yes? Pretty similar?
Yeah.
Right.
Okay. So the way this lands up working, guys, is let's say that this is your heated area, and let's say that you have on the bottom, let's say you have 1,000 square foot of basement area. Let's go back over this a little differently. So we have this is your basement. Okay, now, what that's gonna do though, is it's gonna take our average price per square foot down a little bit. So from 165, if we're gonna do it like this, what we're gonna land up doing, guys, is we're gonna have a 3,600 square foot house, or what's considered to be a 3,600 square foot house, with a basement on there. And now, if we go into Forestdale, we pay $150,000 for the lot, and we have a 3,600 square foot house. How much are those houses selling for? Realistically, I'll just look up. I'll look online. About 1.1 million.
1.2.
Okay, so we go in, and I want to go into more affluent areas, guys. I don't want to go to broke areas. Okay, there's no money in broke areas. You know, there's not. There's no money in broke areas. So if we go in, and let's look at it. Houses for sale in, well, let me go to new houses. Let's go. New houses for sale in Forestdale, St. Louis, Missouri. Or St. Louis area. St. Louis area. Okay. Okay.
350.
Let me change Kirkwood. Put St. Louis, the music Forestdale.
Kirk was an exception.
Say Forestdale.
Kirk was an exception. People have to understand this.
Okay. So we have $1.125 million. The house is 3,400 square feet on, no, the acre, I don't have the acre right here. Okay, 1.19 million. This one's 3,900 square feet. That includes the basement on that one. $1.12 million. There's a lot of homes up here, like over $1 million. Okay, so I just wanted to confirm that. So let's just call it, can we call it $1 million? Is that cool?
Yeah.
$1 million, is that fair?
Yeah.
Okay, so what I want to do is I want to put stress on my business model. Does that make sense?
Yeah.
I don't want to go over to try to make to float the business model. I want to put stress on it. The houses are selling for 1.2, even better. But if we can only get $1 million out of it, let's put some stress on the business model. So let's say that our resale price, guys, is $1 million, okay? This is our resale price, okay? We have 3,600 square feet. The basement's gonna cost us about $110 a square foot to build. This 2,600 square feet, I'm just gonna teach it to you guys the right way. Usually I'll just average it out, but since you guys have basements out here, can I just teach you guys the right way to build this shit? Okay, let me just talk to you guys the right way to build it. So if you guys have a contractor, you're gonna probably be about 130 a square foot on the basement, about 130 a square foot. Your 2,600 square feet, you're gonna be about $170 a square foot, 165 to 170 per square foot, okay? Now, when we go in, and we take 2,600 square feet, I'm gonna divide both these out. So we take 2,600 square feet times 170, that's gonna be 442,000. So we take 400, let me see if this other marker is better than this. There we go. 442. And then we have our 1,000 square feet, that's another $130,000, right? 130, okay? Now, we go in, there's 572. This is our build cost, guys. It's $572,000, okay? Our land, $150,000. We want the bank to pay for both of these two items. So if we go in, we have 572 plus the 150, we have $722,000, okay? 722. Now, $1 million, it's gonna cost us 6% to sell that, so that's $60,000. So our resale cost, $50K. Our lending cost to be able to service the debt on this loan is gonna be about $30,000, guys, about 30K. That's gonna be our debt service. Okay, so we have 722 plus $90,000, right?
Yep.
188K. Okay, that's provided that it only sells for $1 million. Okay, now let me run through this with you guys one more time. We have the land cost 150. That's 72. This money right here, we want this from the bank, guys. We want the bank to pay for this $722,000. Okay, I want you guys to pay attention. That's 722 right there. Okay, now the build cost is going to be a collaborative amount between the 2,600 and the 1,000 square foot basement, $572,000. Are those numbers realistic? Can we build for that?
Yeah.
We can, right? Yeah. I mean, Kirkland, Washington, we're shit, man. The average median home is over $800,000, guys. We're building for $200 a square foot. And those houses are like 1,500 square foot houses, and I'm selling for like $1.2 million up in Kirkland, Washington. Same thing like in Southern California. It's crazy. Okay, but you guys are sitting fairly with what we're doing in Arizona, with what we're doing down in New Mexico, with what we're doing in Colorado, and some of the in Texas, and some of these other states. You guys fare almost equally with those. So 572 is our build cost. These are pass-through costs. These won't cost you anything until the house sells. In fact, the lender will take this on what's called interest reserve, and they'll charge this to you on the back end when the house closes. They'll do a deduction of capital off the back end of your loan. Now, they'll take it from they'll take it from your proceeds. Okay, so they'll give you a credit of proceeds to be able to build a house, and then they'll take it from your proceeds on the back end. Now, to go in and build this is what we need right here, is that 722. Okay, now let me find some room. We don't need this stuff up here. You guys got this? 650, 700K? I'm gonna erase this over here.
Are you using hard money or traditional banks?
I build my house as cash, but all our students are typically using a mixture of everything. But a lot of them are using banks. They're getting construction loans. In fact, we have an affiliate lender that works with us called People Financial, and they're a development company as well, but they own a bank. And so they'll take on high-risk loans, because if you don't finish your home, they'll take your shit from you and they'll finish it for you. That makes sense? I mean, just truth be told, right? Yes.
The 722, is that a complete house with lighting, the cabinets?
That's everything. That's electrical, plumbing, water, that's everything. That's the whole house for $1 million. Okay, it's $1 million home for 722. Okay, now remember what I said, guys. You got to put all this together, right? So I'm going to back up 1 second here. Remember, guys, we go in and people are going, okay, well, how do I know I built this? Because we're looking at comps, guys. Everything is based off of comps. We don't go in and reinvent the wheel. We go in and we do exactly what's already being done in that area, okay? We don't reinvent it. If we go in and we confirm that if it's 2,600 square foot house that has 1,000 square foot basement, has the lowest days on the market and the highest profitabilities, then that's what you build. You go in and everything is public information. You can go into the building and zoning department online and you can pull up that address and pull up the plans. You can superimpose and scroll in to where the plans have the architect's information. If you guys know how to use Google, You know, I know it's hard, I know it's complicated, I know it's not anything new, right? But if you just scroll in, you can Google the phone number of the architect. 90% of the time it's on the plans.
Yes.
So you can call the exact same architect, give them that address, say, I love that home. I want to build this exact same home on this lot. I might change a couple things on it. And then you just go in and you just build the same damn house. You know why? Because it's already proven concept. Does that make sense? Don't reinvent the wheel. If it's already proven concept, people like that home, build the same damn house. And just keep building the same houses over and over and over again. We've had like 5 floor plans that we just rebuilt. I changed the elevations and I just keep building the same damn houses. You don't even know they're the same house. I just changed the elevations, changed the direction of the garage to fit the lot. We build the same damn house all the time. You know, we built a lot of floor plans, but now that I've slowed down doing, I just build about the same 5 houses. That's it. And I just put the house that fits the best on that lot. That's the same damn house I built, because those houses, every time I build them, they freaking sell. Make sense? In those same areas. Now, when we go in, guys, this 722 is key. Now, here's how you get money, guys. You might be sitting back going, I can't afford a $1 million home. How many of you guys are sitting back feeling like that? Like, I can't afford a $1 million home. Okay, now put your hand down. Every single person in here can afford to build $1 million home. Okay, and I'm going to teach you guys how banking works. How many of you guys, I'm not ICE, guys, before I ask this question. All right? I ain't going to arrest you. I promise. Okay? I did this shit in El Paso, Texas. Not one hand went up. I go, how many of you guys are immigrants, not from the United States? Not a fucking hand. In El Paso, Texas. Like, I was like, border is 5 minutes away. Well, I'm calling you guys bullshit right now. Right? Okay? But in their defense, I'm not ICE. Okay? And so I'll tell you guys, how many of you guys are immigrants that did not go through our U.S. education system? Raise your hand. If you're an immigrant that did go through our U.S. education system. Okay? Back here. Okay. Right here. Okay. Why did you come to America?
For a job,
For a job? Why? There's no jobs in your country?
for big, better money.
For big, better money, for opportunity, right? Okay? And yourself?
Marriage, I was married to
To be American? Why did you come to America though? Why didn't you go there? Why didn't you go to your country? No, honestly, like why? You got a business here, right? Because there's better opportunity here in America. Yeah? Right? Okay? Now, this time, why did you come to America?
My wife didn't get a visa in my country.
So you came here? Yeah? Would you rather be, what country are you from?
Brazil,
You're from Brazil? Okay. Which has more financial opportunity, Brazil or United States?
United States.
Okay. There was somebody in the back over here. Yes, sir. Why are you here in America? Better opportunity. Guys, we live in the home of the free, land of the brave, guys. We're in America. Our streets are paved in gold. People come to America for opportunity. Okay? But yet, we're born and raised in a country that oppresses their own people, guys. And I'll tell you guys, it starts with our U.S. education system. The Rockefellers put it together just shy of 100 years ago, guys. And it's a jacked up education system. Yep, and I'll tell you guys, we live in one, even as oppressed as we've created for ourselves, we still live in one of the best countries in the entire world. But the problem is most of you guys aren't taught about lending and banking in school. So the problem is you guys think you guys can't get money. There's a way to get money, guys. Remember what I said about the casinos? Remember what I said about the banks?
Yeah.
You just have to start thinking and understanding that the banks care less about you and they care more about your asset. Understand, guys, that if you go out and you default on this, they can't squeeze shit out of you and turn it into money. Does that make sense?
That's right.
You ain't worth a shit to the bank. All you are is somebody writing a friggin' check. They're going to do a little bit of a check on you to make sure, okay, how many of you guys have an 800 credit score? Okay, one. I've never had an 800 credit score. I don't even know how you get an 800 credit score. Like, it's beyond my understanding, guys. My credit floats between like a 670 and a 720, like always. But I beat the shit out of my credit. I treat it like a stolen car. And I freaking use the shit out of my credit. And so I'll tell you guys that the bank is going to vet you to make sure that you're an okay person and you're not just going to run off with their money, right? But outside of that, they don't give a shit about you. What they care about is the asset. Let me prove this right now. If you go in, you have an 800 credit score, and you go in, and this house, you go into an area to try to build a $1 million home, but comps only support 600,000. Do you think the bank is gonna go, well, this person has an 800 credit score, I'm gonna lend them the money anyways? Do you think they're gonna lend them the money?
No.
No damn way.
No way.
They don't give a shit about their 800 credit score. Their 800 credit score doesn't mean shit. Their debt to income ratio also doesn't mean shit. You know what makes a difference? Is that asset makes a difference. What the bank's really investing in is not you. The bank is investing their money into a hard and tangible asset. Does that make sense?
Yes.
Now, that asset has to match. The comps have to match, guys. If these two things don't match, the bank ain't gonna lend you shit. Make sense?
Yes.
Okay, now, when we go in and we do this, guys, they're collateralizing this $1 million asset to get $722,000. You're gonna have two underwriting. One is gonna be for you to execute on, the other one's gonna be for the bank. The bank doesn't expect you to work for free. This is gonna include the cost of the land, the dirt work, the foundation, the plumbing, the electrical, the framing labor, the framing package, the roof, everything, all the way down. Cabinets, flooring, everything, all the way down. That's gonna come out to $722,000, okay? That's your execution amount right there. The bank doesn't need to know that. The bank is investing in a $1 million house. As long as this spreadsheet, you want it as close to that $1 million as humanly possible. There's a retail amount. Do you work for free, sir? I know you're a contractor. You have to be, right? You're a contractor? Okay, do you work for free? Hell no. When you go out and sell a house, are you leaving skin on the table for your buyers, or are you trying to take as much of it as possible? You selfish son of a bitch. Right? It's America, guys. You go in, you're going to underwrite this thing with the land. You're going to do the foundation, the concrete, the framing, everything. Same line items all the way down. You're going to have a development fee. You're going to have an asset management fee. You're going to have all that stuff in here, and you're going to inflate this by 15 to 20% on every single line item, because that's where your profitability comes from. When you go to the bank doesn't expect that you're going to go in there and build a house for free and build it at cost of $722,000. So if you go in, the bank's going to give you 75% loan to value or loan to cost. You take $1 million and you take 75% of that, how much is that, guys? $750,000, yeah? Okay, so the bank is willing to give you $750,000, and that includes the cost of your land, okay? Your land's included in there. Your first draw is the land. Does that make sense?
Yes.
First draw is the land.
Yes.
Problem is, most people think that 25% comes out of their pocket. It comes from you building equity in an asset. Does that make sense?
Yeah.
Okay? Now, when we go in, guys, you have to understand, this spreadsheet is super important. What the hell did I do with my spreadsheets? That book,
They're right here.
where are they at?
Right here.
Oh, you have them? Oh, I must have had them on that chair. Good job, man. I think that should report too. All right. And then until you find out what they work. If you knew what these were, you'd be like, shit, I can copy all these. This is Miranda's bill. Man, we have some successful women that are working with us, guys. This underwriter right here is actually Miranda's bill. It has her address on here, 24 Longview Drive in Santa Fe. This is her 502 Camino Espanol. When we did our workshop in Nashville, Tennessee, I let Miranda, one of our students, she's a stay-at-home mom, mother of 4. Her husband is a computer tech guy. Has never built a house before in her life. She did 2 fix and flip, lost her ass on both of them. She came in, started working with me 3 years ago. Miranda, on her first builds, guys, when Miranda came in, she gave 50% of her profit to her hard money lender. Guys, how many of you guys would give 50% of your profit to your hard money lender?
No.
$260,000 was her gross profit, guys. $260,000. She gave $130,000 to her hard money lender. She also walked away with $130,000 on her first 2 builds. Now she was resumed in. Miranda last year did 4 builds in her second year working with us. She netted well over $500,000. Miranda's now making over $250,000 per build. She still gives her hard money guy 10% now, but $30,000 versus $130,000. Does that make sense? And she's going in, and so now, but he got her in the game. This year, guys, she's already made $500,000. We're only halfway through the year. And so Miranda this year will make over $1 million. She's only been working with me for less than 3 years, guys. How freaking cool is that? This is one of her bills. I let her present this in Tennessee at our last workshop a couple months back. And Miranda got on stage and she broke down her real bill and her real numbers. This is what you go to the bank with, guys. When you go to the bank, you're gonna need to go to the bank with this spreadsheet. And what's cool is when you come to our workshop, I give you these in electronic form, and you're able to white label these, put your business name on them, and it gives every single line item and cost that you have on there. That's it right there. That's a spreadsheet. So when you go in and you have the spreadsheet, guys, you can go in and you can underwrite it right here. You underwrite yours and you underwrite the one for the bank. Does that make sense?
Yeah.
And the bank, that's what they need. Now, you have to go through the process to do this, and the cost to you guys to go through the process is going to be probably about $10,000 to $15,000, okay? Now, some people are saying, well, I don't have $10,000 to $15,000. I know some of you guys do, some of you guys don't. Those that don't, we have bridge lenders like Pathway Financial, and we have some other lenders that'll even give high-risk loans to people to be able to go in and bridge you guys over the gap. When you get this first draw on your loan, when you first get your first draw, you pay that shit off and you just go build a house. Does that make sense? You reimburse that capital yourself, and then you go back in and you build a house. Now, you're gonna have to go in, you have to get a survey company, okay? You're gonna need a survey company to survey the land. That's gonna cost you for the whole house, to get started and pull out of the ground, it's gonna cost you right around $1,300 to $1,500. You're gonna need to get an architect, okay? The architect is gonna cost you right around $5,000. I usually pay a lot less than that, but on average, about $5,000. And you're gonna need a structural engineer and also a civil engineer. Between both of those, it's gonna cost you about another $4,000 for engineering. Okay, now, total, that's nine, it's about $10,500, 10.5. Okay, that's what's gonna cost you to get a house out of the ground. You'll reimburse 100% of that money on your first draw with your bank loan, but you will have to put that up to get out of the ground. With that $10,000 though, you can you can go out and build $1 million home, guys, provided you have the spreadsheet and you have your underwriting done. Because the bank will not give you lending until you have a finished set of prints. Because how do they go out and appraise a house when they have nothing to appraise? And the reason that 90% of you guys will get a no from the bank is because you'll go to the bank before we have a lot and go, Mr. Banker, will you lend me money to build a house? And they're going to say, do you have a lot? And you're going to say, no. And then you say, Mr. Banker, can you lend me the money for a house? It's going to be 2,500 square feet or 3,600 square feet. Then you say, do you have a set of prints that we can see? You're going to say, no. And you say, Mr. Banker, can you give me a construction loan? Do you have experience? No. They're going to say, no. Make sense? Okay. Now, so if they're going to tell you no, and you know that, if by doing it the wrong way, can you guys be gullible enough to do it the right fucking way? Okay? And I say it like that because, man, people will come in and they'll become a part of our community. People that come in and invest $10,000 to be a part of our community, and I'll tell them this, and they still do the same dumb shit. And I'll be like, damn, guys, like, listen up. Guys, I'm telling you guys, you have to go through this to get money. This equals money. This spreadsheet right here equals money. Without these four things, this is number 4. Without these 4 things, you cannot get money from a bank. Now, provided you go into an area and you get your comps, you do those 4 things, you're going to get money from the bank, guys. And here's the thing. Not every bank is the perfect bank. I have a perfect bank for you guys, but I'll tell you guys, I make commissions if you guys use my affiliate bank. But I don't sell you guys on using my bank because I don't give a shit about the affiliate commissions because it's like nothing. It's like nothing. I don't care. I told them, fuck, give my people a discount. Fuck the affiliate commission. I don't need it. Like, I don't even care about that. But he goes, no, well, we'll just lower the fees. But the fees are more expensive to use my guys because they're more of a high-risk lender. But they'll lend to you guys, provided you follow our process. In fact, if you work with us and you're part of our community, they sit back and they go, did Jerome vet your project? And if you say yes, and you go through it, and I sign off on your project, they will lend you money on the house, provided that we went through it, right? And as long as you can vet like a threshold of reasonability with your credit, 680, if you don't have a 680 credit score and it's lower than that, we'll help you fix that shit, okay? We'll at least get you up right there. That's easy, okay? I can help you, almost everybody in here fix that in like 60 days or less. And it's gonna take you 90 days to get this thing going out of the ground. Does that make sense?
Yes.
Okay, so we have some time, so we'll help you guys with that. Now, here's what I tell you guys about lenders. Go to your local lenders first. Don't come to mine unless you have to. Mine's great, they'll help you guys. I'd rather you guys go to your local lenders because your local lenders will give you better prices and you're building relationships. It's relationship banking, okay? Now, here's the thing, guys. In Miami on September 27th to 28th, let me explain this to you guys because this will be life transformational for you guys. I don't make shit on these trainings. There will be a $597 charge fee for you guys. The tickets, I don't give any tickets away. 100% of everybody has to pay to go to Nashville. I mean, not to Nashville, to Miami. We used to say Nashville. To Miami. 100% of you guys. Okay? Now, here's what happens, guys. And let me explain this to you guys. Let me pull this up before I explain Miami to you guys. Small credit unions and regional banks in the St. Louis, Missouri area. This is the most important thing, guys. And the reason I dwell on this is because if you can't get money, you're fucked. You can't do nothing. Does that make sense?
Yeah.
That's the biggest cost people have, right?
Yeah.
Like you can go in, you can't make money unless you get the financing for it. Yes, sir.
Are you looking for banks like Neighbors?
Look, I'm gonna tell you right now.
Or community?
St. Louis Community Credit Union, Alturo Credit Union, St. Louis Community Credit Union, Neighbors Credit Union, Alliance Credit Union, Together Credit Union, Gateway Metro Federal Credit Union, Westside Federal Credit Union, Unite Credit Union, Western again, St. Louis Community Credit Union, UBC Credit Union, County Credit Union, Community America Credit Union, Century Credit Union, Scott Credit Union, St. Louis Policemen's Credit Union. You guys get the point?
Yeah.
There's no lack of that's not even the small banks, it's just the credit unions. Does that make sense?
Yeah.
Not every one of these guys lends on construction lending. And so what's gonna happen is you guys are gonna get some no's. Like I just had this guy, Heath Ridenhour, is a football coach. He's an assistant principal in high school. And he went in and he went to the bank and I told him, I said, Heath, you're not ready to go to the bank yet. He went and he asked 16 banks, guys. This is just a couple weeks ago. And I go, bro, what are you doing? You got 16 no's. He called me concerned. Like, Jerome, I'm already over $10,000 into this process. And I talked to 16 banks. I got 16 no's. I go, bro, what are your prints? He goes, I don't have them. I go, you have a lot. I go, why are you talking to banks? I go, what are you doing talking to banks? You should be talking to banks. He goes, yeah, my wife got mad at me because you scolded me last night and said I wasn't listening to you. I said, you listen to your wife. Stop going out, guys, and follow the process, okay? Because the banks will lend you money provided you follow the process, but you gotta be global enough. The problem is, guys, is you guys go through an education system, you spend 13,000 hours in an education system, it doesn't teach you shit about lending, it doesn't teach you about banking. If you're lucky enough to go out in your early adult life and buy a house, you land up learning what's called conforming lending through the process of buying a house. That's conforming lending. Debt to income ratios, the appraised value of the house. That's not commercial lending, guys. Conforming lending has nothing to do with business. Does that make sense?
Yes.
This has nothing to do with conforming lending. This is non-conforming lending. This is commercial lending. Does that make sense? No one taught this shit to you guys. In fact, you can go through business school and not get taught this shit. Does that make sense? No, it doesn't make sense. That does not make sense. Like, how do you go through business school and not learn that shit? I don't get it. So guess what? Because you can go through business school and still not get it, I put a workshop together for you guys. Okay? And I put these together on accident. I don't know if is there anybody in here that ever been to my big conferences in Las Vegas, Nevada, where I put over 1,000 people in the seats? Those conferences, guys, they cost me near of $1 million to put on when I walk on stage. And I'll tell you guys, they're great. You get entertained, you learn a lot of shit. I put a lot of cool people on stage. We've had a lot of celebrities on there. And we've had a lot of great entrepreneurs on that stage. But you know what I realized by doing that? There was an attrition rate when there's 1,000 people there. You guys sit back and you guys look at us on stage and you think we're somebody special. We're not. We bleed and we talk and stuff. Same way you guys do. Same damn person you guys are. It's why. Does that make sense? Mm-hmm. So I did these things to be a little bit more personable. I told my team, I said, fuck these big events. They're stressful. They cost us a shit ton of money. And I said, the ROI is tough on these things. So I said, let's do this. let's go into these hybrid events and let's do these little 250 people events. I said, we don't advertise them. You will never see an ad on Instagram. You won't see an ad on Facebook for these events. They're by invite only, because if I run an ad, I'll fill those seats within a week or two. And I said, I don't want anybody in those seats. I want the right people in those seats. So I said, we'll do these little hybrid meetups for free, where I pay for this room, and I pay for thousands of dollars to get you guys. I've just advertised this event for 4 days, guys, 4 to 4.5 days to fill this room. And we'll make people come out of their way to sit in these seats for an hour, hour and a half, to make sure that I have a captive audience that knows what we're doing, that understands what we're doing, is interested in what we're doing, and we'll only invite the people that come to our meetups. Now, here's the caveat. We market these for just a few months, and we only let 20 people from each meetup register, because we only have so many seats, because I trust the registration at 250 people. Problem is, it's September 27th to 28th, and we're already at 180 tickets, guys. And we haven't even really tried to market it yet. And so with or without anybody sitting here, the seats will be filled. Does that make sense? So I tell you guys, is it expensive to go? Yeah, traveling and investing in yourself is expensive, but do it. Because I've been doing it my whole freaking life. In fact, in 2016, when I got started back, in 2016, guys, I felt like I was stagnant going through the 2008 recession. I went through hell. Like, you guys don't even know, I felt like I worked for free for like almost a decade. Because I went and I had pounded my head against the wall. I was buying real estate in Phoenix. And I'll tell you, we ended up doing really freaking good out of the 2008 recession, but I didn't know that yet at the time. I was buying all this distressed real estate. And I realized about 2016, I was like, shit, I spent $1 million cash out of pocket for building homes, putting 64 units of fourplexes together that I just bought cash out of the 2008 recession in Phoenix. That same $1 million that I made, that I put to work, I sold that entire portfolio for over $4.2 million. Okay, that was a 4x multiplier, guys. 400% return on my money in less than a decade. I took that money, I invested it into a multifamily apartment complex in Holliston, Arizona. It's an 82-unit apartment complex. I still own it today. I bought it for $7.2 million. It's the only 1031 exchange I've ever done in my entire life. I did a cash out refinance for $15.5 million 4 years ago on that property. I walked out of there with $5 million tax-free in my pocket on that one property, guys. And in 2000, when I bought that property in 2016, cap rates went up the next year. This is where I started learning cap rates. In 2017, I went and bought a 74-unit apartment complex. I had 8 less units, and I paid $1 million more for that property, less than a year later, 9 months later. So then I went back to buy another one at the end of 2017, and the price went up another $1 million for this 100-unit, and it was a piece of shit. And the cap rates went from 8% to 7% to 6%, all in less than 2 years. And I said, this is crazy. Who's going to go out and pay these prices? I said, screw it. I'm going to build these things. So in 2017, I went out. I said, I'm going to go proof of concept. And in 2018, I built my first apartment complex in Tacoma. I had a buddy named Steve, and we went in together. We took 6 investors, guys. 6 of us went in. We all invested $250,000 to buy an old bowling alley. We bought this old bowling alley and we leveled it. And with the 6 investors and $250,000, we built for $16 million. We built a 132-unit apartment complex in Tucson, Arizona. When we were done and it stabilized, we did a cash out refi on that thing, $32 million. It took us less than 18 months. And at the same time, I knew that was happening. I started permitting and building shit in Phoenix. And so now we're doing about 150 to 200 million of these dollars of these a year. And so in Phoenix, we have these going up. You guys want to understand why that's so important? You guys have 5 more minutes in you?
Yeah.
Sure? You guys got 5 more minutes in you? Okay. Because here's what's going to happen.
Jerome,
Yes.
I'm gonna pass out these QR codes.
Okay.
You guys.
Yes. So watch. Listen, guys. I got Rick here. Guys, there's only 20 seats available. If you guys even are thinking about going over, and here's the thing about Miami. Here's the thing about Miami, guys. If you have a spouse or a business partner, it's $200 for a +1. Okay. So it's $798. You're going to notice that today I discounted them down to $200. but it's only for today, guys. The tickets do go back up to $797 tomorrow, but they're $597 today only until midnight, and then the checkout page will go back up. Just get them, even if you don't buy them today, and it goes up $200. When you get there, you'll come and thank me later. Okay, I won't discount them back for you guys because I know what you guys are getting. By the time I pay $50,000 for food and the event, and I pay for the venue and stuff, you guys are gonna have a great time. Saturday, guys, when we come in, we're gonna start at 9 o'clock in the morning. We're gonna underwrite. We're gonna build business lines of credit for the first hour, guys, live with you guys. So that those of you guys that are using your personal credit to get started, we're going to leverage your personal credit to get started, but I'm going to help you guys build a business line of credit that morning, and we're going to do it live. Within an hour, you'll already have set up a business line of credit with your LLCs and everything live in Miami, okay? Now, you guys can scan that QR code, or you guys got a text message from my office. You guys can click that link on that text message from my office, and you can register from that link that's in your phone as well. Now, when you guys do this, guys, lunch is on me that day. Before lunch, we're gonna go in and we're gonna underwrite single-family real estate. We're gonna do this right here, okay? You guys are all gonna get this spreadsheet, and you guys are gonna get this book electronically. So you guys are gonna have this spreadsheet, and you can have an electronic version of this, okay? Both for residential and for multifamily. And then you guys are gonna get this whole book in a PDF. This book, guys, is my business. It's 28 years, and it's every spreadsheet that we utilize in my office to train our staff. And what we do is you go in, guys, if you come in, you work for us, it has every checklist item to build a house in here. And what I did is I called Tammy one day and I said, hey, Tammy, can you do me a favor? Can you give every single PDF that we have for our training tools? Can you give it away to, so you go through like the framing, the HV that you need to build a house is in this book, guys. And she put it together. And when they went to go make these books, guys, I sat back and it took them a month because of the spine of the book. And I said, what the hell is the spine of the book? They go the backside of the book. And I said, well, how big is the book? I was thinking it was like this little tiny book. And they're like, it's 350 pages. I said, no shit. I said, it's 350 pages. 350 pages, guys. It's 28 years. One PDF, one spreadsheet at a time that I put together over the course of 28 years to train my staff. We were building over 50 homes a year with this systems and the processes that are in this book right here. Those of you guys that come in first day, I'll probably give you guys, I have a few of them, Rick brought those. You guys can thank Rick. I usually don't bring them with us. I mean, I'll give a few of those out today to people that are coming out to join us up in Miami, okay? Now, lunch is on me that day, guys. I'm paying for your lunch. I'm going to feed you guys good food, not peanut butter and jelly, not ham sandwiches. I'm going to feed you guys steak, fish, chicken. We're going to have good food, real food for lunch. You guys are going to get up from your chairs in the venue, and we're going to move. I'll either rent the entire restaurant out like I did in Nashville. I rented the entire restaurant out, and I fed you guys at the restaurant, or we'll put you guys in another ballroom where we feed you guys real food. And then you guys will get up and network with the people that are there. You guys won't leave. You guys don't have to run around looking for food that day. And then when you come back, guys, there's another spreadsheet that looks just like that one, and we're going to get into the multifamily game. Now, the multifamily is important. 100% of you guys need to focus on it, and here's why. Because that's where this all comes to real life. Because I'll tell you guys that you guys can come in, and I know for a lot of people getting started, they think that making money is the problem. Doing this isn't making money. Doing this is not the problem, guys. It's houses. Guys, you guys look outside, it's houses. Contractors traditionally are not the smartest tools in the shed. Okay, truth be told. Okay, but there's some really smart ones out there. But it's houses, guys. We're not putting spaceships on the moon. We're not doing pet rocks. We're not flipping NFTs. We're not doing any of that. It's homes. But when we come in, guys, and you guys are really making this $180,000, $88,000 profit, here's the thing, guys. You're going to have a tax liability. How many of you guys want to do that and then write a check for $80,000 to the IRS? How many of you guys want to write a check for $80,000 to the IRS?
No.
Anybody?
No.
Nobody. You take the risk. You take on the loan. You go out and do the build, and now you have to give $80,000 of that to the IRS. Bag that deal. So when you go in, guys, we're going to underwrite an 8-unit apartment complex. And the reason 8 units is because I think everybody in here, duplexes, great. Build them, sell them. Fourplexes, build them, sell them. 6 unit, 5 units, build them, sell them. They're not worth keeping, guys. They ain't worth the shit to keep. Don't keep them. They don't make you any money. They're fucking stressful. Don't build them and keep them. Make sense? You want to build and keep something, start at 8 units and go up from there, okay? The reason I talk about 8 units is because at 8 units, nationwide, average rents are going to be right around $1,750 a month. You have an 8-unit apartment complex, assuming 95% occupancy, 5% vacancy for Revolution. That asset's going to be worth someplace right around $2.1 million, stabilized value to the bank. Okay, 8 units. You'll hold about $750,000 in equity. The goal is year number 1 to build 1 house, guys. You go out part-time and you build 1 house in 12 months and make $188,000. That is life transformational for everybody in here. Every single person in here. With the second that you go out and you go through this process and you get your building permits and you break ground, when you're part of our community, I go in and I press you hard. And I'll say, you broke ground, it's time for you to go out. You replenished your money. Now the money you replenished, you're going to use to go out and permit 2 houses, 2 lots. And the reason why is because the second these houses are done, you're going to have 2 more houses that are permit ready to go. So the second you sell that house and it cashes in, you're going to break ground on 2 more houses. Does that make sense? And when you break ground on 2 more houses, you just added another $360-some thousand in tax liability. Plus that, you have $500,000 in tax liability that you have on your shoulders. You can either build an apartment complex and cost segregate it, or you can pay $250,000 in income taxes. One or the other. It's up to you. Okay? When we do this, the IRS tells us that we can cost segregate this, but we can't depreciate the land. So if the land costs, let's say, $300,000, that means the asset value itself is $1.9 million or $1.8 million. So we have $1.8 million in asset value. You can depreciate 100% of that in year number 1 through what's called bonus depreciations. That means that until you earn $1.8 million in net taxable income, you pay $0 in federal income taxes. So if you go in and let's say, what do you do for a living professionally right now?
I'm a caretaker.
You're what?
Caretaker, like I'll take care of it.
So you're a caretaker.
Yeah.
Okay. So what do you do right now?
On a martial arts business.
You own a martial arts business. How much did you claim like on taxes last year around and about netting? Round about 100 grand total. Make the number up. Some of that's 100 grand. Okay. So look, he can go out and make 100 grand net in his martial arts business. That's a big cash business. We always go to dance school. But if he could make 100 grand in his martial arts business that year, he could go out and build 2 of these houses and make just shy of $400,000 building houses, put $500,000 on his books, and pay $0 in federal income taxes. And until he earns $1.8 million in net taxable income, he pays $0 in federal income taxes. And this never expires, guys. That never expires. Okay? Why do you guys need to get into multifamily? Because this right here will earn you about $38,000 a year in passive income after you pay your mortgage and after you pay all your expenses and bills. Okay? $38,000 doesn't look like a lot of money. But let me explain to you guys that people will work a 30-year career and retire with our federal government, and they won't even make $38,000 a year. Does that make sense? Yeah. Okay? Here's what else is cool. That also pays for your health insurance. And let me explain why. Guys, I have a family of 4. Last year, how much do you think I paid per month for health insurance for a family of 4? If you're part of my community, don't say it.
12,000.
What's that?
12,000.
12,000 a month?
A year.
A year, so about 800 to 1,000 a month. Who else? About 1,200 a month? 1,500 a month?
I think 1,200, 1,500.
1,500 a month?
Cool, we're not.
2,000.
2,000 a month? You're all wrong. I pay $50 a month. I have better health insurance than all of you guys. You know why? Because I'm low income. I have $0 in net taxable income.
Okay, you hit it with the curve, okay.
My kids can get free private school, everything. You know why?
You're not
We're
trying.
low income. Cost segregation, guys. Cost segregation.
Yeah, okay.
You get it? Why do we teach the underwriting? Because it's one of the single most important things that you guys need to learn. We pay millions of dollars a year in property taxes, but I pay $0 a year in federal income taxes. Does that make sense? No, it doesn't make sense. That's why you need to go and join us in Miami. Because it doesn't make sense to anybody. You know what, guys? Here's the thing. We ain't taught this stuff in school. It's to incentivize developers. The federal government tried to create housing. They suck at being developers. So they give the advantages to us that develop real estate. And so the biggest thing is that there is going to be a housing need because we're in a housing deficit while you and I are on this earth. And probably while our kids, their entire existence is on this earth. So understand, guys, that you have an opportunity to take advantage of houses. Guys, it's houses. Make a smart decision. Yes, sir.
If you get the choice of doing the bills, the housing bills, or multifamily to start with, do you have a recommendation?
You can do either or. He asked if you could choose like to either build houses or multifamily, what would you do? Most people need active income. So the people that need active income build houses because the houses are going to give you that active income. And it's life transformational because think about it. You could do this part-time. It takes you about 10 hours a week. If you show up 5 days a week for 1 hour in the mornings before you go to work and you spend an hour during the day just calling subcontractors and scheduling stuff, that's all it's going to take you. And you're going to be one of the best contractors on this earth. Spending 10 hours a week.
But isn't it a little bit more passive when you do the multifamily? I'm getting ready to do
Yes,
a multifamily deal.
Yes, and so on the multifamily, like I got a guy named Bruno that's up in Little Rock, Arkansas. He's only been working with us for just over a year. His first build was a 27-unit apartment complex. He just sold it. His first build, he owned a little pizzeria. He's been in the United States for 7 years, guys. 7 years. Bruno came in. He built a 27-unit apartment complex. His first build, never built anything in his life. Owned a little pizzeria in Little Rock, Arkansas. $1.7 million net profit. And so Bruno will actually be in Miami. And so you guys could be like a Bruno, man. And these guys are real friggin' people, guys. That are sitting, they came in sitting in chairs just like you. You already have a business, bro. You're already doing it. You don't need the income from building. What'll end up happening though is you'll end up coming in doing multifamily, and then you say, "Damn, I'm going to take down a house," because I have 15 Subway stores. I have 217 employees that are our biggest guys. Biggest pain in the ass ever. I'll tell you that when I would get windows broken in the middle of the night. And I told my wife, when we start selling off, I said, I will never own a business that has those employees ever again. I'd rather sit on a house for 3-4 months because I don't get a call at midnight. I don't get an employee calling in sick. I don't have management problems. And when that house sells, I make more money on that one house that's sitting than I do in an entire year with multiple Subway stores. Does that make sense? So you'll end up building because of that. Yes, sir.
Okay, the reason why I'm here was trying to understand your multiplex formula and so on. Singles has a CDA process going on right now.
Yeah.
Okay, and there's CDAs in 85 different communities around the St. Louis metropolitan area. So they're giving you money on top of money based on your understanding on the ratio, the 70-30 or the 50-30-20 split.
Yep. So when he's talking about, there's a lot of affordability components that municipalities are giving away to incentivize housing. FHA does it, and you can go in, if it's like an owner build and it's your first one and you're gonna own and occupy it, or you're gonna do like a fourplex or something, you can go in and you can get as low as 3% down, and you can go in and get one closing for the entire construction loan and stabilized loan all at one time with almost zero money out of pocket, 0 to 3% out of pocket. There is so much type of incentive to build right now, so many. And it's just available to us, guys. But now the question is, how do you learn how to do that? Is that overwhelming to any of you guys? I mean, be honest. How many of you guys is that overwhelming to? Raise your hand.
Yeah, you gotta be on point.
So here's the thing though. If you don't know what you don't know, how do you go do it, right? So here's the thing. Here's what happened, guys. And I'm going to give you guys an opportunity. You guys see Rick Figueroa back here? Right here with the white shirt? You guys see Rick? How do you miss Rick? That big brown teddy bear. So Rick and I have known each other for over 32, 33 years. We've met him in Madison, Wisconsin back in like 1993, 94. And we were in multi-level marketing together. Rick is as close to me as any brother would ever be to any human being. We have went through life challenges together and ups and downs forever. Rick has seen me build these companies from nothing. I remember when he was building his companies. And I'll tell you guys that one of the biggest things that we've done is we created this kind of on accident. This wasn't on purpose, like what you guys are seeing here. And here's what's cool, guys, is that when I started doing this, Ty Lopez had asked me to do some trainings for him on his real estate mentor program. So I went ahead and did it, and we started getting this outreach. I was trying to raise capital for the first time in my life in 2018. I had always self-performed. So we put this together to raise capital. So what ended up happening is that we came in, and to raise capital, people started learning how to build houses. Ty told me, he goes, can you teach these folks something that's easy for them to do, like the average person can do? And I said, that's just building houses. So we put an education system together, guys, to teach people how to build houses. And one of the biggest things is I didn't realize that people were actually going to be successful doing it. We have a community of over 2,000 people nationwide now, and I had no idea that they were going to go out and crush it the way they're crushing it. And we have people all over the country. I can go through my phone just in the last 48 hours, and I have like 5 people that have sold builds in our community or selling builds just in the last 48 hours, guys. I can go through my phone, like from our call yesterday, and we have dozens and dozens of people that over the next few weeks will have permitted houses that are turning dirt on new builds that are coming out of the ground. And what's cool, guys, is that we did this on accident, and we're changing people's lives. And so what's real neat now is that we have the opportunity to come in and still offer the ability for you guys. I won't do this forever, guys. I'm doing this right now, and I'm going to keep this going because my son is going to be a senior in high school this year. And, you know, we're going to all these Division I colleges. And the way my son got his scholarships is that because of who I am on the internet, I was able to probe these coaches. These coaches started following me, not my son. And these coaches reached out to me because they wanted to build. Then my son, because of his accolades, I told him, okay, I'm going to get you invites to these colleges, but you have to show up and perform. We were going to dinner with all these Division I coaches all over the country. And we would go sit down for dinner. And at dinner, we didn't talk about football. Guess what we talked about?
Real estate.
Building houses, guys. And I've always told my kids, you guys will build houses, you guys will do this stuff. You have to learn it. I don't care if you coach. I don't care what you do for a living, but you have to learn this. Because if you learn this, you'll be protected forever. And so my son got it. We were in Mid-Tennessee State University with Coach Williams, the offensive coordinator. And Coach Williams was sitting at dinner. We're sitting at STK Steakhouse in downtown Nashville that night. And we left STK Steakhouse in downtown Nashville. And my son goes, you know what, Daddy? He goes, I wanted to coach my whole life. He goes, but all these guys, I'm trying to do what they're doing, and all of these guys are trying to do what you do. A little light bulb went off in my son's head that day. And since that day, all my sons ever talk about it, he goes, I already know what I'm going to do. I'm going to do what you do, Dad. I'm going to use football to take me as far as it can get me. But once it takes me as far as it's going to get me, it's just going to take me. I want to build houses, and I want to build apartments, and I want to do what you do. Right. So I'm doing this not for you guys. This business model is my business model. I didn't put this shit together for you guys. This is my real business model. It was a business model I put together for me when I was broke. And the time for me to make money, not you guys. I just happen to share that business model with you guys, and it's the same business model that I teach my kids. Keith Howard, the coach I was telling you guys about, it's also an assistant principal. That's my son's high school coach. He's building houses now. He just turned dirt on his very first house on Monday. And they start the foundation on this following Monday. They just did all the dirt work this week. And the framework, the form setting is going on right now today as we speak, guys. Here's the thing, guys. This isn't NFTs, and I tell you guys this. You guys have a real opportunity to take advantage of really building houses. And this is a business model that's good enough for my own kids. And I still utilize today. Don't be stupid, take advantage of it. I'm telling you guys. It doesn't matter if you're in your 50s, 60s, 20s, 30s, 80s. It's a good business model. Because even if you're older, we have, how old is Terry and them? They're like in their late 70s, huh?
Yeah, like 60s, yeah, late 60s, yeah.
Yeah,
Yeah, you know, also, Jay, we got some members of BBF here. I want to make sure we recognize.
Yeah, who's in our BBF community right now?
A couple of you guys drove like far to come be with us.
Yeah. How far did you come in? You live right here too? Yeah, you live here? Yeah. How long have you been part of our BBF community? You've been part of our BBF community. Oh, you're not? I've seen you on our webinars. Geez, someone. Maybe, okay. But you've been a part of our community. How long have you been a part of our community for?
A little over a year.
A little over a year? Tell them what you think about our community.
It's pretty great. A lot of information, a lot of support. You just gotta implement it and not drag your feet.
Yeah.
That's what I've been doing.
That's all right, though. It's all right. Be busy.
I got a question.
Okay. Who else is part of our community here? Oh, how you doing, man?
I'm good. How are you?
How is, tell these folks about Nashville and what your experience has been in the last month or so, the last 2 months that you guys have been a part of our community. You guys are newer in our community.
Yeah, we joined about a couple months ago. We went to Nashville. It was a great event. It's wonderful to be together with people that are on the same page and pulling the same direction. And you have the encouragement, not just from the leaders, but also from the people around you. And then you see, somebody's been in that for 6 months and they're, turning dirt on their first house, or somebody's been in there for a couple of years and they sold two. And so you see the comps just like that in the people around you. So that's fantastic. And the event itself, very encouraging. It gives you sort of the direction where you will be going. Yeah, food was great. We got to, go to a really nice restaurant on Saturday and chat for a couple hours. It was fantastic. And it costs money, but like Jerome was saying, if you're not willing to pay something, then you might not value what you get.
But tell me your story. Like you guys have a pretty cool story. And understand, guys, I do Nashville like this. I did Nashville like this. I decided to do Miami the same way. I keep them intimate because I get to know these folks personally. So I take a personal interest in them, and so that I can actually help them. And I'm not easy on these guys. I am hard on these guys. I do push them. There's sometimes in the calls, and I run the programs like a coach because it's all I know, right? I've never been a teacher, but I've been coached my whole life. So because I've been coached at the highest levels in wrestling and stuff, I run everything we do the exact same way. So your guys' disadvantage, there's gonna be some days you're like, holy shit. And it's just the way I was raised, But you guys have a not a unique story, but a story that's relatable to a more mature audience as well.
We are in Springfield, Illinois, about 90 miles from here. Started building on our own, not knowing squat, honestly. Starting with an ICF building, a lot of extra work. And then, we found, okay, there's a system. So we're just about ready to put this one on the market. I hope we will at least break even. This was a hard one. This really was. From all the different angles. I don't sleep at night sometimes because of the stress of it. Funding everything myself. Now we have resources. The system is the best part of it, plus the guidance. I mean, we get weekly calls and you go through other people's builds, so you learn what they're doing to apply to your own situation. It's fantastic. Yeah.
They're not retired, but you guys empty nesters.
Yeah.
And second run in life now with an empty home, and decided that this is what that they were going to build as their second part of their life. And I sat at dinner talking to them about this. And they're going, look, we don't have no kids in the house anymore. It's our second run at it, and this is now it's time for us to be selfish and do what we want to do. And we're taking on building. They took on that build before they met me. And so they go, oh my God, it's been the hardest thing ever. I wish we would have found you before. Now they have the system. So on this next build, we'll walk away and we'll get these guys a $200,000+ profit on their next build. And we're already in the process of working through that next build right now with them as a part of our community. Sure. And what's cool is if he may never have built ever again without finding us, because that first build was so freaking hard. Does that make sense? Yeah. And the biggest thing is your first one's your most important, guys. The first one. And if you go in, the cost of losing on your first one is catastrophic.